Start off with the big picture. Looking at a World Bank report, it's estimated that the Kenyan economy will grow by 2 to 3% this year compared to the 1.7% growth which we realized in 2007. Are the market's estimates in line with the World Bank's?
Thank you very much, Alishia, and that's a good analysis of the market. Basically, World Bank report is basically in line with what we had been anticipating, though analysts in Kenya were more optimistic at us being able to do even up to 4% growth.
Well, it is certainly good news considering that we're coming off a 1.7% growth, but there are areas that are of concern in that this may not necessarily translate into real economy growth. So what are the implications here for Kenya Incorporated, corporate Kenya?
Well, thank you very much for that. Definitely, as the World Bank has reported, some of the growth like this one may not be able to trickle down to some of the, especially the retail investors. But as for corporates, we might see them being able to still sustain growth, and that's going to be very, very welcome. We are seeing some of the financials being able to do double-digit growth, which is very welcome. But as for the retailers as well as the common mwananchi, we might not be able to really see this trickling down.
Let's take a look then in that context at one of the sectors. I mean, banking shares are, of course, highly correlated with GDP growth. What's your view on that sector specifically right now?
Well, for the financials, if I may begin by even observing as per today's behavior, we were seeing by the close of last week, most of the financial counters were really taking a hit in terms of going down. But today we saw them picking up. Things like Equity Bank, Cooperative Bank have somehow turned around because most analysts were looking at them as being able to have already hit their peak in terms of performance. But some of these counters are definitely going to be able to benefit because we might see World Bank chipping in terms of ensuring that credit is going to be affordable to most of the people, and also ensuring that the infrastructure, especially in terms of the financial markets, is going to be able to be as fluid so that it can be able to help the economy to be able to boost and grow.
Well, if we're looking at valuations, certainly they are proving to be a nice incentive for many of the market watchers we've been speaking to. I mean, the banking sector valuations are clustered between an 8 to 13 PE ratio levels, which must be attractive for medium to long-term investors. So where exactly would you be looking at? What banks in particular?
Well, some of the banks which are still very, very promising are some of the conservative as well as stable firms like Barclays Bank, Standard Chartered. Some of these others which had taken a bit of a novel approach like Equity Bank and Cooperative, which have been expanding aggressively. Some of the banks to be a bit cautious about, especially in such an economic scenario, mainly because we are not seeing too much of returns in terms of expansion.
Of course, the highlight of the past earnings season has been the fact that it's those banks that have adopted a more conservative approach that have really stood the test of time here. Barclays is a case in point, and Standard Chartered as well. What are you making of growth strategies of companies like Equity and KCB that have been more aggressive in their expansion drives?
Well, we must at least applaud some of those strategies because mainly they have been able to be very, very novel and very welcome in an industry or a market like ours, which boasts of a very significant percentage of the adult population, which is still unbanked. So when we see some of these products like M-banking, as well as opening branches in some of these remote areas, it's very, very welcome. Only that, unfortunately, it seems that the strategy really works best in a growth economy, an economy which is basically booming. And in an economy like this one, which is basically a recessionary one, we would hope that they would approach a bit more conservative stance just to be able to remain above sea level and also to protect their bottom line.
To what extent are balance sheet concerns actually worrying investors and weighing on investors' minds right now?
At the moment, most of the investors are looking at things like capital base and as well as experience in the market. Some of these banks like Barclays, Standard Chartered, who have been basically in the market over a very long period of time and also have a background of a multinational approach, which helps them to be able to benefit from other industries, is very, very good. But again, also from a local perspective, some of the things that are a bit of a concern are things like default rate, especially in the Kenyan market, where we are seeing some of the people who have been worst hit by the recession are the retailers, and those are the people who have been taking a lot of unsecured loans.
Let's take a look in the meantime at some of the country's main revenue generating sectors here. First of all, the agri space. I mean, would you be playing amongst the tea players right now? Because yes, while we've got the drought to consider on the one hand, on the other, we've got demand to consider as well when supply is pretty low, and that pushing prices significantly higher. So would you be playing amongst the tea players?
Yes, definitely some of the sectors which we are really hoping, especially as we go to the third and the fourth quarter of the year, we are looking at the agricultural sector as well as tourism. But taking a focus on the agricultural sector, first of all, we are anticipating some short rains and even the weather forecasts of El Nino rains, which may be able to boost economic agricultural performance. And specifically in the tea sector, some of the things that are favored, as you observed there, is the tea prices, which have been basically good because of the demand pressure. But as output has relatively been low, which kind of tends to affect especially our market, because as much as the prices are good, if we do not have something to sell, we may not be able to still keep farmers fed. But also looking at the foreign exchange market, we are seeing as though the exchange rate has relatively been stable, which is tending to still cushion some of our output.
In the commercial and services space, of course, it's Safaricom that's always stealing the attention there, especially given the fact that we've seen undersea cables landing, and there's been a lot of activity within that space in terms of development moving forward. We've just heard news out in South Africa this morning that Altec has increased its stake in Kenya Data Networks. This is becoming a highly competitive arena. How much threat do you see Altec in this space increasing its presence, posing for Safaricom's progress moving forward?
That's a very good observation, especially looking at the way the market opened. Like for instance, today, Safaricom, some of the techno stocks like Safaricom, Access Kenya have taken a hit. We saw them dipping slightly today. We are seeing a lot of supply as investors are taking into consideration some of those factors, as we are seeing more players coming into the market. That definitely is going to affect how our technical counters are going to be able to be performing, especially over this period. With more players coming in, definitely that's going to be able to cut on their profitability, and mainly because they are suffering because of the output or the investment cost of the fiber optic setup, which they've been able to come into. That is definitely going to affect them. And specifically looking at Safaricom, for one, we are seeing them, their diversification, as well as trying to ensure that they keep on their market share. That might be able to cushion them for the time being.
Given that this is the changing playing field that we're looking at here, and we've got Safaricom and Access Kenya, the only two IT players listed at the exchange, do you see other players actually venturing forth and progressing with IPOs, the likes of KDN, the likes of some of your other telecom players as well?
Well, looking at from the broader picture, as you had mentioned, looking at Kenya's Vision 2030, we are seeing a lot of focus on the ICT sector. For instance, CCK has been even working on shifting from analog to digital TV, which is going to be very welcome. And with all that shift and capital investment, you're going to be seeing a lot of players, and KDN as well as other private institutions are really coming up. And as you've observed, you're also having a lot of interest from foreign direct investment, which is also very welcome. So it seems the ICT sector is one of the sectors to still look at, and some of the listed stocks like Safaricom, Access Kenya still look promising because basically the sector is still untapped.